June 24th, 2016. 3 o'clock in the morning, London time. The trading screens at J.P. Morgan's Canary Wharf Tower turned blood red. The British pound was in free fall. In 60 minutes, it dropped 10% against the dollar. Currency traders watched in horror as 150 years of monetary stability evaporated. This wasn't a market correction. It was a cardiac arrest. We're told Brexit was about sovereignty, about taking back control, about patriotism and borders and fishing rights painted on a red bus. That's the story politicians sold. But here's the truth the ledger reveals. Brexit wasn't a political revolution. It was an economic execution. Britain didn't vote to leave Europe. Britain voted to shoot itself in the balance sheet. Let me show you how a G7 economy commits financial suicide. Let me show you how accountants, not armies, brought a nation to its knees. This is the story of the most expensive referendum in history, and the bill is still coming due. Before the knife went in, Britain looked invincible. The city of London was the financial capital of the world. Walk through Mayfair, and you'd see Rolls-Royces double-parked outside private banks. Hedge fund managers buying penthouses for £20 million in cash. The London Stock Exchange processed $4 trillion of trades every single day. This was the empire's last jewel, and it glittered. The numbers told a story of dominance. Britain had the 5th largest economy on earth. Its GDP was $3 trillion. Unemployment was below 5%. The pound traded at 1.50 against the dollar. International students paid £40,000 a year to study at Oxford. Russian oligarchs paid $50 million for townhouses in Knightsbridge. The world wanted to park its money in London. It felt safe. It felt permanent. But beneath the marble floors and the champagne receptions, the foundation was rotting. Britain had stopped making things decades ago. The factories had closed in the 1980s. The coal mines were dead. The steel mills were gone. What replaced them was finance. The entire economy was a betting floor. When you build a nation on credit and speculation, you're building on sand. And in 2008, the tide came in. The financial crisis was Britain's warning shot. Northern Rock collapsed. Royal Bank of Scotland needed a £45 billion government bailout. Lloyds swallowed HBOS to stop a bank run. The UK Treasury had to guarantee £800 billion of banking liabilities overnight. Think about that number. $800 billion. That's more than half the country's entire annual economic output pledged to save the banks. But the real damage wasn't the bailout. It was what happened to productivity. Before 2008, British worker output grew 2% every year, like clockwork. After the crash, it flatlined, zero growth, for a decade. Economists called it the productivity puzzle. It wasn't a puzzle. It was a symptom. The patient was bleeding internally, and nobody wanted to look at the scan. Then came austerity. The Conservative government decided the way to fix a broken economy was to starve it. They cut public investment by 30%. Roads weren't repaired. Schools lost teachers. Hospitals ran out of beds. Local councils went bankrupt. Libraries closed. Youth centers shut down. For 8 years, Britain cannibalized itself to pay the bank's debts. By 2016, real wages were lower than they were in 2007. An entire decade of living standards erased. This is where the trap was set. The British public was angry. They were exhausted. They'd been told to tighten their belts while bankers got bonuses. They'd watched their towns decay while London grew richer. The ledger was unbalanced and everybody could feel it. All they needed was someone to tell them who to blame. Enter the Brexiteers. They painted a red bus with a lie. £350 million a week sent to Brussels. Take it back. Spend it on the National Health Service. It was fiction. The real number was half that, and Britain got most of it back in subsidies. But the lie was beautiful. It told people their poverty wasn't caused by the financial crisis. It wasn't caused by austerity. It was caused by foreigners, by bureaucrats in Belgium, by Polish plumbers stealing jobs. It was the oldest con in the book. And it worked. David Cameron called the referendum to save his career. He never thought he'd lose. Every economic institution in Britain begged him not to gamble. The Bank of England warned of recession. The Treasury published a report showing Brexit would cost £4,000 per household. The International Monetary Fund said it would trigger a crisis. Even Goldman Sachs and Morgan Stanley said don't do it. Cameron ignored them all. He believed in his own luck. He was wrong. On June 23, 2016, 17 million people voted to leave the European Union. The margin was paper-thin, 52 to 48%. In the financial markets, that's not a mandate. That's a coin flip. And you don't restructure a $3 trillion economy on a coin flip. But the vote was binding. The die was cast. Within 8 hours, David Cameron resigned. He walked out of Downing Street humming a tune while the pound collapsed behind him. There was no plan. The Leave campaign had never expected to win. They had no blueprint for exit, no transition strategy. No economic model. It was a car crash in slow motion, and nobody was wearing a seatbelt. The markets reacted with violence. The pound fell from 1.50 to 1.32 overnight. That's a 12% crash. In currency terms, that's apocalyptic. Pension funds lost £30 billion in value in a single day. The FTSE 250 index, which tracks domestic companies, fell 8% at opening. The Bank of England had to inject £250 billion of liquidity to stop a panic. This was supposed to be Independence Day. It looked like Black Monday. But the real killer wasn't the crash. It was the uncertainty. Businesses don't invest when they don't know the rules. If you're a factory owner and you don't know what tariffs will exist in 2 years, you don't buy new machines. You don't hire workers. You sit on your cash and wait. From June 2016 onward, British business investment flatlined. Look at the graph. Every other G7 country kept growing. America's line went up. Germany's went up. Japan's went up. Britain's went horizontal. Dead in the water. The cost of that investment freeze is incalculable. It's the factory that was never built, the software that was never developed, the training that never happened. Economists call it the counterfactual. It's the ghost of growth that should have been. The Office for Budget Responsibility calculated the number. Brexit reduced UK GDP by 4%. 4% of £3 trillion is £120 billion. Every single year, gone, evaporated. That's the entire education budget of the country vanished into thin air. Then came the currency bleed. When the pound crashes, imports get expensive. Britain imports 40% of its food. It imports 90% of its fuel. Suddenly every banana cost more. Every tank of petrol cost more. Every computer chip cost more. Inflation jumped from 0 to 3% in 6 months. For workers whose wages hadn't risen in a decade, this was a pay cut. The cost of living rose, but the paycheck stayed flat. Britain got poorer overnight, and most people didn't even notice the knife going in. The Brexiteers claimed a weak pound was good. They said it would boost exports, make British goods cheaper abroad. But Britain doesn't dig coal and sell it raw. Britain makes complex products, jet engines, pharmaceuticals, cars. To make those things, you need to import components, steel from Sweden, electronics from Taiwan, chemicals from Germany. When the pound falls, those inputs get expensive. The cost advantage disappears. There was no export boom, just inflation. For 4 years, Britain was trapped in negotiation hell. Theresa May tried to find a compromise that satisfied everyone. She failed. Every deal she proposed was voted down by Parliament. The European Union watched with bewilderment. They couldn't understand what Britain wanted. The British negotiators wanted full access to European markets, but no freedom of movement. They wanted to ignore European regulations, but sell into European shops. It was economically illiterate. Brussels said no. Take it or leave it. The company started to move. It wasn't dramatic. No CEO held a press conference. They just quietly shifted assets. J.P. Morgan moved $230 billion from London to Frankfurt. Barclays moved $190 billion to Dublin. Goldman Sachs, UBS, Morgan Stanley, all of them built new European headquarters. The jobs followed the money. 1,000 traders here, 500 analysts there. By 2020, London had lost 7,000 finance jobs. And those are the visible ones. The real number is higher. Amsterdam overtook London as Europe's biggest share trading center in January 2021. Read that again. Amsterdam, a city with 800,000 people, beat a city of 9 million. That's not supposed to happen. But when you erect trade barriers, capital flows around them. The city of London was bleeding out and nobody could stop it. The golden goose was dying in real time. Then came the labor shock. One of the Brexit promises was to stop immigration, to take back control of the borders. The government ended freedom of movement. Polish builders went home. Romanian fruit pickers left. Spanish nurses returned to Madrid. These were the people who picked the strawberries and drove the trucks and staffed the care homes. They did the jobs British workers didn't want. When they left, the crops rotted in the fields. In September 2021, Britain faced a fuel crisis. Not because there was no petrol, because there were no drivers to deliver it. The haulage industry was short 100,000 truck drivers. Most of them had been Eastern European. They'd left after Brexit. Now the petrol stations ran dry. People queued for 4 hours to fill their tanks. Fights broke out at forecourts. A G7 nation couldn't distribute fuel. It was humiliating. The government panicked and offered emergency visas. 3-month temporary permits for drivers. The Europeans laughed. Why would they come back to a country that had told them to leave? They were earning good money in Germany and France with no paperwork. Britain had burned the bridge, and now it was begging people to swim across the river. Nobody came. On December 31st, 2020, Britain officially left the single market. The next morning, the reality hit. Small exporters were the first to die. A cheese maker in Cheshire used to send pallets to France for £50. Now it cost 200. The paperwork alone took 4 hours. You needed health certificates, customs declarations, veterinary checks. For a small business with thin margins, it was impossible. Thousands of exporters simply gave up. They retreated to the domestic market and shrank. British trade with the EU collapsed 15% in the first quarter of 2021. While global trade was booming as the world recovered from COVID, British trade was dying. The government called them teething problems. But these weren't teething problems. This was the new normal. Britain had voluntarily placed sanctions on itself. It was economic masochism. Then came the final bullet. September 2022. Boris Johnson had resigned in disgrace. The Conservative Party chose a new leader, Liz Truss. She was a true believer. She thought the problem was that Brexit hadn't been radical enough. She wanted to turn Britain into Singapore-on-Thames. Low taxes, low regulation, a buccaneering free market utopia. She announced a mini-budget, £45 billion of unfunded tax cuts, the biggest in 50 years. Here's the thing about government borrowing. It only works if the people lending you money trust you. Trust is the currency. When Liz Truss stood in Parliament and said she'd borrow billions to fund tax cuts for the rich without explaining how she'd pay it back, the bond market heard one word: default. The traders didn't wait for explanations. They started selling UK government bonds. When bond prices fall, interest rates spike. Within 48 hours, the yield on 10-year gilts jumped from 3.5% to 4.5%. But the real crisis was in the pension funds. British pensions use a strategy called liability-driven investment. It's complex leverage. It relies on stable bond prices. When bond prices crashed, the pension funds faced margin calls. They needed cash immediately. They didn't have it. They had to sell assets. Selling more assets pushed prices down further. It was a doom loop, a death spiral. On Wednesday morning, the Bank of England got a terrifying phone call. The pension system was hours from collapse. The bank had to intervene. They printed £65 billion in emergency liquidity. They bought the junk bonds Liz Truss had created. It was a bailout. The government had to be rescued from itself. The pound crashed to 1.03 against the dollar, the lowest level in history. For a brief moment, it looked like sterling would hit parity. £1 equals $1. The psychological barrier was crumbling. Liz Truss lasted 44 days. She was outlasted by a lettuce. A tabloid newspaper live-streamed a head of lettuce to see which would rot first. The lettuce won. It was funny until you realized what it meant. International investors had watched a G7 nations government blow itself up. They'd watched the Bank of England have to save pensions from the Prime Minister. Trust was destroyed. Britain now carried a risk premium, a Brexit tax. Every time the government borrowed money, it paid more than Germany or France. The market was charging for instability. Rishi Sunak took over and played the role of undertaker. He raised taxes, cut spending, tried to reassure the markets Britain wasn't a banana republic. But the damage was permanent. Mortgage rates doubled. Millions of homeowners saw their monthly payments jump by £300. That's £4,000 a year. The trust tax, the price of incompetence, the bill for Brexit ideology. Here's where we are today. The UK economy is smaller than it was before the pandemic. It's the only G7 country that hasn't recovered. Growth forecasts show Britain at the bottom. Slower than America, slower than Germany, slower than France, even slower than Italy. The only major economy doing worse is Russia, and Russia is under the most severe sanctions in modern history. Britain did this to itself. The average British household is £2,000 a year poorer than it would have been without Brexit. That's the OBR's number, not a political estimate. The government's own forecasters, public services are collapsing. The NHS has waiting lists of 7.5 million people. Schools have concrete falling from ceilings. The police don't investigate burglaries anymore. This is what decline looks like. It's not Hollywood. It's a pothole you can't avoid. It's waiting 6 weeks for a doctor. It's paying £7 for butter. The fishing industry was promised a golden age. They got betrayal. Scottish fishermen went bankrupt because their shellfish rotted at the border. The Brexit deal gave them nothing. Farmers were sold to Australia in a rushed trade deal. British beef now competes with Australian industrial farms that have lower standards and lower costs. The government sacrificed its own farmers for a photo opportunity. The car industry is facing a ticking time bomb called rules of origin. Without battery factories, British electric cars will face 10% tariffs in Europe. Honda already left. Nissan is reviewing its future. And science. Britain was a European leader in research. Horizon Europe was a €100 billion fund. Britain was kicked out for 3 years while it used science as a bargaining chip. Researchers left, grants were lost. Britain eventually rejoined in late 2023, but the damage was done. You can't pause discovery. The world moved on without Britain. The Union itself is cracking. Scotland voted 62% to remain. They were dragged out against their will. The Scottish National Party is pushing for independence. Northern Ireland is trapped in limbo. The Good Friday Agreement relied on no border with Ireland. Brexit forced a border in the Irish Sea. Unionists feel betrayed. The government in Belfast collapsed for 2 years. Peace itself was risked for Brexit purity. The final insult is immigration. The Leave campaign promised to cut the numbers. Net migration in 2022 was 600,000, the highest on record. The European workers left. They were replaced by workers from India, Nigeria, the Philippines. The demographic change accelerated. But now the economy is less efficient because the flexible European labor market has gone. Britain lost control while claiming to take it back. So what was it worth? The Brexiteers point to vaccine approval. Debunked as false. Britain could have done that in the EU. They point to trade deals with Australia and New Zealand. Those deals add 0.08% to GDP over 15 years. That's a rounding error. It's quitting a £100,000 job to take a paper route. They point to sovereignty. But sovereignty is a feeling. The bond market is reality. And the bond market says Britain is poorer, weaker, and riskier. The British people were sold a fantasy. They were told they could reclaim imperial glory. Instead, they mortgaged their children's future. The polls now show 60% think Brexit was a mistake. Even Leave voters are changing their minds. They look at the bills. They look at the crumbling hospitals. They say this isn't what we voted for.